Sasha, and welcome to another episode of Let's Talk Stocks, episode number 129. And today what I'd like to do is go over in detail about technical analysis indicators and simplify them for you. I know that many people are constantly looking for what should they have on their screen, what indicator should they use, which one is better for them. And that's what I'm going to explain to you today, because there's a lot of different indicators out there. There's so many that you could use, you can try. Some will be right for you and others will be completely wrong for you. And, because if you're just getting started with just all these different indicators out there, it can be very confusing. So I'm going to share with you what I have on my screen, how to look at some of these indicators, some of the popular indicators out there, what I personally do, and just give you some insights and simplify things for you on a bigger picture point of view. We're not going to get into the nitty-gritty exactly of how to use every indicator and just 10 different ways to use one indicator, because that would just be getting into the details, into the trenches, and that is possible to do in the future. But I don't think it's that important unless you're really honed in into one specific indicator. So if you're just getting started on indicators, you're still struggling to figure out which indicator to use, or just you're unaware and just unsure of the whole indicator process and how to incorporate them in your charts, I'm going to simplify it for you and show you what I do personally and how I look at the charts, and just give you some variations. So in either case, with that being said, keep in mind these are just strictly for educational purposes, and any stocks that we talk about are not recommendations to buy or sell any stocks or options or equities. So let's take a look at some indicators and looking at some charts. Now, typically in general, before we get into this, it's important you understand that there's a lot of different indicators out there. And when you look at indicators, you have basically momentum-based indicators, which also talk about strength. Then you also have, indicators that are basically overbought or oversold based indicators. Okay, so when we look at momentum and strength indicators, you're probably going to look at things like the MACD, you'll probably look at things like the ADX, and even potentially the RSI, okay? Then you also have, when you go into overbought or oversold indicators, you're looking at Fibonacci indicators. Okay, so that could also be an indicator. Looking at Bollinger Bands, those could be an indicator. And then you're looking at typically stochastics, and there's 3 stochastics, but it's typically the slow stochastics. So these are just a few common ones. Now, keep in mind that in theory and technicality, the RSI indicator can actually be in this bracket or area because they talk about overbought and oversold condition. Okay, so sometimes certain indicators can be in both areas, and an indicator like a simple moving average can actually be in both. You can look at a moving average as a momentum or how strong a stock is, and also as an overbought or oversold condition. And this is why things get a little bit confusing. Now, when you also look at indicators, let's just go back just a little bit. There's a couple terms I'd like to discuss, and that is the oscillators. When you look at oscillators, it's basically just saying how far up or down a stock is moving or oscillating in between a range. Okay, so that's kind of another thing that we'll talk about. Then we'll also talk about basically leading indicators and lagging indicators. Lagging indicators are usually lag the market. They're behind the market. Okay, so they're delayed. Leading indicators try to give you a little bit of a signal kind of ahead of the market. Doesn't always work out, but they try to kind of predict what's coming up in the future. Now, my favorite one is volume, but that's kind of the simplified version behind indicators. Usually people are looking at one of the other fancy indicators when they're looking at leading indicators. So in either case, with that being said, let's get into this and let's take a look at some indicators. Now, before we quickly get into that, what is the big picture point of view behind these indicators? What's really the point? What's the point of these indicators? Well, it's to see the perspective, right? To see the perspective and see the bigger picture. Same thing. What's the bigger picture? Well, it's to see that bigger picture. And that's what the indicators will tell you. Often if you go on a shorter time frame, if you go into a time frame that's smaller, these indicators can be less reliable, and that's why they often have fake signals or false signals. So let's look at some indicators and look at charts and see what it is that they're doing, what you should watch for, and how to really use it. Ultimately, one of the ways that I really look at charts is just a simplified version. It's basically like this. Okay, I look at charts, and not even on a bar chart right here. This is a candlestick chart. I look at a bar chart typically, which will look like this, and this is only because it condenses space. But for our video purposes, since it's easier to see, I'll show the candlesticks. But in general, this is my chart setup. This is what I look at most of the time on most charts, is I'm just looking at volume, and I'm looking at a couple of moving averages, and then I'm also looking at the price. Okay, so volume, price, and that's pretty much all I need to see. Because what these indicators do, and as you're looking at indicators, they're really a relationship between price and volume. So if you look at the moving average here that you see in a purple line, the moving average is a relationship to price. It averages the price out, and that's your indicator. And we'll get into these in a minute, but just to give you a bigger picture scope of view. The other thing that I look at is kind of like a 3 time frame view. So if I look at, let's just say, the S&P 500, okay, so on the left side, you might see, okay, here's a weekly chart. So you can see it's coming in from 2016. This gives me about a 6-month view. You could look at things like this. Then the next part, or the middle chart right here, would give me just this little range right there. That's, you know, the most recent couple of weeks, okay, and that's just a daily chart. I can, of course, zoom in and out of those charts. And then the one on the right, kind of, again, a vertical split. The one on the right is that same little corner, but it's more of usually a 30-minute, an hour, 2 hour, just something where I can see the ticks a little bit more intraday or more actively. And that's kind of another view that I'll use to look at things. And it allows me to see things right away in 3 perspectives. So I could see things right away in a weekly, I could see things in a daily, and then I could see that daily broken down on the price momentum on the stock right there, on the action and what's going on and what's happening within the stock. So this is another way to do it. Now, in general, if I'm looking on a single chart and I'm just looking at one chart, and let's just take Apple, for example, here. If we're looking at Apple, there's so many indicators that you could plot around your chart. And 90% of the time, 95% of the time, if I'm just looking at price and volume, then the rest of the time, I'm not really using these fancy indicators. From time to time, when I see a move expanded beyond a certain range, okay, so let's say I'm in an Apple position, okay, and if I'm in an Apple position and this stock broke out, and say I got into this position a lot earlier, it could have been 120, could have been 130, doesn't matter. If I got in it earlier, keep in mind, what do these indicators tell me? Well, they tell me overbought and oversold conditions. They also tell me momentum. How strong is the move? So it would be good to see that somewhere as we're powering higher. Okay, so as we're getting far extended from the move, let's say from the moving average, it would be nice to see, well, how strong is that move? Because here volume is kind of dying out on a relative basis, but maybe I'm not reading something correct. So it's good to look at 1 or 2 more indicators. So keep in mind, I'm going to cover a few indicators here, but you really only want to look at 1 or 2 or 3 at the most. 1 or 2, I think, when you're getting started is probably all that you really need. If you start looking at a bunch of them, you're going to have, again, mixed signals, false breakouts. You're not going to be sure of what's going on, what's happening. So focus price and volume. That is key. Price is always the key. Volume is confirmation of the price. And then as you get into indicators, now you're starting to look at, okay, once things are stretched, whether that's to the upside, or even if you're looking on the downside move, okay, How far stretched are they? You have this ABCD pattern, and again, you're looking at how far stretched are we, and are we moving on strength? Is it overbought? Is it oversold? If it's oversold, then that might give me a chance, or it might say, okay, well, I should probably get in. If it's oversold, then I probably should get in. So again, another way of looking at things. So the first one I want to cover is basically, let's just look at the MACD. Okay, and here we're looking at the MACD variation of Apple, and you can see there's basically a couple different lines. So many of these indicators, they have a few lines. They'll bounce around from a certain range, or they oscillate and they cross over. That's pretty much how you use some of these indicators. The lines are either too high, too low, overbought, oversold, crossing over, and then you're also looking at what are these lines doing, okay, the resistance or support of these lines as well. So that's another way of kind of using these indicators. That's the simplified version of it, and that goes along with whether you're doing MACD or whether you're doing Bollinger Bands or RSI, same thing. Now, here's the problem with these indicators is it's a little bit tricky, especially as you're looking at kind of like a daily chart. It's very tough to look at, okay, well, where does these cross over? Well, we can see kind of there's a crossover in February in Apple. Well, that was a gap up. So it tells me on a MACD the strength or the momentum. It doesn't necessarily tell me the full direction, but it does tell me, okay, there's a bit of strength coming in right there after the pop. Now, again, if we start going into a 2-day, you start seeing these indicators a little bit more smoother, 3-day, 4-day, or weekly, or even monthly. When you look at the monthly, it's pretty obvious. Once you start looking at clean charts and you're looking and evaluating these indicators in a clean manner, that's what allows you to understand and evaluate these indicators. So you can see right here, basically, we have in late 2012, the MACD was crossing over. You have this green line crossing over the slower gray line. And you can see on the price action right there, this stock started to roll over and pull back. Okay, so eventually, again, we get back, we cross over, and you can see here the histogram where the green happens. Okay, as we get back into that price level, okay, that's potentially where your next buying opportunity was as far as just that indicator goes. Okay, so if you were looking at, let's just say, resistance lines, support lines, those kinds of things, that indicator was also telling you a signal right there near the split level. Okay, and that's where momentum continued moving and going. So again, you would have rode that stock, seeing that strength on a bigger picture up until where you start getting that crossover effect, which again was mid-2015 or so. And then again, the indicator would tell you that things would pull back. So could you jump in and out of these stocks at those times? Absolutely. Could you also buy when the indicator's at lower prices, right? So when you're at, let's just say, when you're starting that crossover, you could go ahead and get back into that stock again or add to your position. That's another way of doing it. But typically, looking at these indicators on a bigger picture, as you can see, is a lot more clearer. Okay, so most of the time, I'm not looking at it like this on a chart. I'm actually looking at this chart or the daily chart, and I'm looking at this, right? And then as I'm looking for trading decisions and maybe double checking something, maybe this stock I think is getting a little too far ahead of itself. If I believe that, okay, well, is a pullback coming around the corner? Well, maybe there might be a couple of days of pullback, just like, you know, we've had a, let's just say way back in 2011, there was some sideways action, but the indicator was still okay. It was still trending higher. You know, we almost crossed at that price point around 2011, 2012, but it didn't happen. And that's why you look at the bigger picture. And here we're looking at the monthly. And the same thing here. You're looking at it from a bigger picture point of view to see perspective at how strong this move is. Okay, so that's one kind of thing you could do, is you're looking at strength, momentum. The other thing we could do is look at extensions. How far extended are they? Okay, so, and we could look at Bollinger Band. So this is just, again, a simple example. So again, the daily, you can see, is basically, this indicator will tell you how far of a deviation, standard deviation move do we have to an upper range versus the lower range. And again, it's technically overbought or oversold. If we're outside of that range, you're kind of overbought in the short term. If it's under that range, you'd be oversold in the short range. But again, this is the daily. If you go to the 2-day, all of a sudden things get adjusted, right? So you get adjusted. So here, when we get in September of 2016, we're a little overbought, and that's why prices pull back just slightly. It's not going to be large, just slightly. It's not going to tell you that prices are going to continue heading higher or lower. It's just simply telling you how far extended that move is. So when you get into oversold territory, where the Bollinger Band's over here, this is outside of that range, probably good buying opportunity. Right now, again, you couple this with volume, because sometimes this can continue being oversold for quite a while. You know, don't make a mistake that just because it's outside of that range, it's going to be just fine. You just go ahead and buy it, and then it'll continue heading higher. In this case, it worked out in Apple, but that's not always the case. So if you look at, let's just say, S&P, and here, if you look at the Bollinger Bands, let's just go back to the daily here, and we look at right here, this range, and here's our daily over in November. You can see we were oversold for a couple of days, and you know, these things can continue heading lower. So don't think that they'll reverse very quickly. In that case, it did reverse, but if you evaluate some of these past price points, things can just continue heading lower and lower and lower and lower. So be mindful of the move. In either case, looking at this indicator in general, if you're looking at it, when you're oversold in this conditions on the Bollinger Bands, might be a good opportunity to go ahead and buy a few shares, right? So if you go to 3-day, if you go to the 2-day, there's different scenarios and situations depending on what you're looking at. And again, just gives you perspective. Overbought, oversold. Is this the only thing that you do in order to make a trading decision? Absolutely not. You evaluate it on 3 time frames. You evaluate the bigger picture. You know, you go through it on a daily, the weekly, the monthly, you know, evaluate it with the volume, evaluate the chart patterns, evaluate it in that way. And then once you have your analysis and evaluation, then you might say, okay, let me take a quick peek or take a quick look at Bollinger Bands. Okay, so let me see. On a monthly basis, we're a little bit extended. So a slight little pullback may not be bad for the stock. And that's kind of the way you look at it. This indicators, or these indicators, any of these indicators, you're kind of looking at the last point to just double check your analysis, to reconfirm that what you've already evaluated is correct. So here, even though the stock is heading higher, and it can continue heading higher, it can stay above the Bollinger Band. So just like we did over in 2014, 2015, we were at the upper range of that Bollinger Band almost for a year and a half there. It can stay in that kind of range, but just keep in mind that we're a bit extended. That's all. And that's why when you're a bit extended, you have to take profits into strength. So again, that's kind of what that indicator does. When you're looking at Fibonacci sequences, again, another indicator. So if I look at Fibonacci sequences right here, and I just basically, it just tells you the potential retracement, the amount of retracement, and I draw it from the swing points, from a swing low to a swing high, and a typical normal retracement is 50%. And if you take that across, and we go from a swing low to a swing high, we pull back to 50%. So now you think about it, okay, well, we had a pullback. Volume is also showing there that, okay, we're pulling back, or the price pattern showing you it's pulling back. We're coming into 50%. Then you also evaluate it maybe with another indicator if you want, just like we did with, here's our monthly. So let's say, okay, well, where's the Bollinger Band? We're at the lows of the Bollinger Band as well, so it could be good value. If you want to look at the MACD, okay, and let's just look at, what was that, a weekly, monthly. So here as well, you can see we're kind of on that histogram where we're reversing in that direction. Now, you want to be very careful on this, right? And that's why you're using other indicators to kind of combine that analysis. Okay, and you can see it's kind of moving up. And then you finally get that crossover a little bit later. So putting that together can show you, okay, well, that's a pretty decent, or it could be a favorable entry point. So again, another way to look at these kinds of indicators. But again, this is just the analysis after you've already done your homework, after you've already done your analysis. Another indicator here is the RSI, or Relative Strength Index. Again, if we look at kind of the daily, there's a lot of clutter in there. Now, people still use that, and you can modify these to be a little better for day trading and so on and so forth. But to simplify it for you, again, if you look at, let's just say, the weekly or the monthly, the way you can look at these indicators, one of the simple ways also is, again, overbought, oversold. So if you're kind of looking at, okay, right here, this indicator in 2012, 2013 in Apple kind of are creating resistance. Strength is not building anymore, whereas in the past, strength was kind of building, right? Strength was building, and then finally you had the pretty good crossover and a break of this trend line, because you can still create and draw trend lines and lines of support on these strengths, because if strength continues to be linear and then it breaks, then obviously that strength is getting weaker. So here the strength broke, and again, this is not showing you direction. This is showing you strength or overbought or oversold conditions. And that's why you have these red lines and these teal lines between the 30 and the 70 on the RSI, where it's they're overbought. You know, if they're overbought, they're beyond that 70. If they're oversold, they're under the 30. It's not always the case, because if you're looking for an uptrending stock like Apple, you basically have your oversold condition. You have to redefine that line. And in this case, it's right around that 40 range, because when you look at it in 2013, we've kind of hit that 40 range. And then again, when we hit the 2016, the lows there, you can see also we're around that 40 range, and it bounced right off of that because this stock is trending higher. So you're just basically looking at the strength of this move, right? The strength of the stock, and you're drawing a support level on the indicator themselves. Now, if you're looking at another stock, let's just use Win, for example. Here on this stock, you can actually see, and this is the monthly chart, keep in mind, you can actually see in this chart where it's breaking below the 30 on the RSI, and that's really oversold. And that's why you can see when we get into oversold levels, this stock eventually starts to climb back a little bit, and that's what happened at the end of 2015 and in 2016, and now we're slowly starting to get into a little bit more normal level. Not overbought, not oversold, which actually means it could go either direction if you just base it just on that indicator. So in that case, you have to be very careful, because if that indicator is smack dab in the middle of 50, then you have to be prepared. Well, stock can actually go that way or that way, okay? Because it's overbought or oversold, but it's based on strength, RSI, Relative Strength Index, right? So it makes it confusing because it's a strength indicator, but it also measures overbought and oversold. Okay, so we've covered a handful of these indicators so far. Let's see, what other ones are there? I mean, there's Williams AD %R. That's another pretty popular one. Works in a similar fashion. MACD we've covered. RSI we've covered. PPO is another one that sometimes I look at. Price percent oscillator from time to time. But again, it's a very slight, rare moment. ADX, the same thing. You have the ADX strength index that you're looking at. Overextension one way or the other. I'm not going to go in that much detail on all these indicators because they work in a very similar fashion. You can look at them. They have certain advantages and disadvantages between them, but overall they work in a similar fashion. And they're just trying to find the range of either strength, or they're trying to find, you know, momentum or overbought or oversold conditions. And you pair this with the volume. Okay, so the volume is kind of key. Volume with the price puts it together, and then 90% of your view should be right here. And then you just quickly take a glance. Okay, I'm looking, let's just say at win, and then you're looking at, let's say, the weekly, and then you say, okay, I like it, the stock is breaking out, but let me look at the Bollinger Bands. How far extended? We're a little bit on the high end on the Bollinger Band. How about the weekly? Yeah, a little extended. Maybe I'll wait for a slight pullback, or if I'm getting in and I want to buy, let's say, 1,000 shares, maybe I'll only buy 100 or 200 now and see if it can keep heading higher like this in the upper range of the Bollinger Band. But I'm expecting a pullback sometime because it's in the upper range, so that's kind of the way you use these indicators. It's not like you're watching the indicator and all of a sudden you're buying based on the indicator or selling based on the indicator, but you're putting multiple things together and money management together to see the bigger picture and see the perspective. So in either case, that's the way you do it. Looking at multiple time frames, the same thing. That's the way I watch it. I watch my prices, my charts. That's key. Remember, price is number one. Volume helps confirm the price move. And ultimately, you're looking at how the stock is behaving. Is it behaving sluggishly? Is it behaving strongly? And sometimes you can read these things from these indicators, like the RSI, like the MACD. You can also see how far extended it is with like a Bollinger Band. And that's how you really do it. That's how you put these things together as far as indicators go. There are, of course, little tidbits, little secrets of using these indicators, different settings for different types of trading. We didn't get into that kind of stuff in this video because it would be too much to cover, let's just say 4 or 5 or 6 indicators. But typically the standard settings work just fine. Certain indicators may need a certain tweak of settings if you're trading a little bit differently. As you can see here, just like on the MACD, it's a lot easier to view this on a longer time frame, and it's a little bit more clear. As you get a little better with it, you could get into smaller time frames like the weekly or even the daily, but until you get better with them, I recommend sticking to a longer time frame only because it's going to whip you around on the signals. So you can see here, just like on the MACD, we have a lot of crossover signals, and it'll whip you in and out of the stock a little more than maybe you should, especially if you're just getting started in trading. So just be careful of that because there's always a lot of fake signals. So if you go a little bit longer or wider, it's a lot better. So again, looking at win right here that we have in 2014, you can see there's a crossover signal in 2013. There was a bullish crossover. In 2014, there was a bearish crossover. So you can see how that actually worked out really well, but that's on a longer time frame. So thanks for joining me in this video. I hope you found it really helpful. If you have any specific questions, by all means, please reach out to me. Now, if you want to join me on my newsletter list, and that way you get updated as I release new training videos or get notified when new books, new courses, or in-depth training materials, or even webinars that I have live go out, then go ahead, get on my newsletter list by clicking the link here on this page. When you get to that page, enter your name and email address, and I'll be sure to send you those newsletters when they are released. In the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.